And welcome to one of the first, but not the first webinar in 2021 from Reuters Events. This one is on driving sustainable change in claims. We all have lived through quite a bit of change in 2020 and much necessary change, obviously situationally, but perhaps in the bigger picture as well of things that we've been building up the need to do. The question is, how do we make that change sustainable? Have the impacts of that change really hit the bottom line, hit the customers in the way that we intended it to, and recognize that we've unlocked an ability to evolve and to change as an industry that maybe we didn't think we had before. I know for many of you, those work from home projects, the enablement of that maybe had been on the drawing board. It was seen as a 6, 12, 18-month project. And then lo and behold, we all got it done in a few days. So if anything, that taught us maybe we can move faster than we thought we did. But I think we also don't necessarily want to do it in that kind of fire drill scramble that we had to do it in 2020. So how do we make this a repeatable way to keep pushing forward on all the things we need to engage in, and in particular in claims, that moment of truth in the industry? I'm Brian Falchuk. I'm the host for this webinar. I'm the managing partner of Insurance Evolution Partners and the author of The Future of Insurance: From Disruption to Evolution. And I'm very excited to be joined today by three additional leaders in the industry: Mark Carter from IBM, David Vanalek from Markel, and Cal Hankins from CSAA Insurance Group. And I will introduce them in a moment. Before we do that, and before I hand over to them, two things to keep in mind. One is the Q&A. There's a little Q&A button on the bottom of your Zoom screen. Please do hit that and enter your questions as the conversation goes on. Mark, David, and Cal all have some great points to share on this topic. So as those questions come to you, you don't have to wait till the Q&A section opens up. Just go ahead and put those questions in, and we will try to take as many of them as we can on the back half of this webinar. The other is watch your inboxes. March 3rd at 11 a.m. There's another great webinar coming from Reuters Events that I know will be interesting to so many of you. So please do watch your inboxes and sign up for another free webinar from the Reuters team with some really valuable conversations that we all need to be having. So with that, David, let me start with you. David Vanalek is the Chief Operating Officer of Claims at Markel. And I'm excited to, David and I are both specialty lines people at our heart. So I'm excited to hear David's thoughts from the claims perspective, especially in specialty lines. David, over to you.
Yeah, thank you, Brian, and thanks to Cal and Mark for joining us as well, and thanks to Reuters Events for putting this together and allowing us the opportunity to kind of kick off the year here on this particular topic of driving sustainable change in claims. In preparation for today's session, I actually looked back at some notes that I'd put together on a similar topic about a year ago, which was, of course, pre-COVID. And after scanning through some of those notes, I quickly tore it up because I was like, none of that came to fruition, pretty much. But Brian, to your point, as we've, are several months, into a larger global pandemic here, when I look at claims and when, many in the industry, view claims, especially from the specialty lines carrier side of the house, what makes automation and other tool sets somewhat unique in our space is we have a very heterogeneous mix of products, which precipitates a very heterogeneous mix of claims at various levels. We have different types of customers and that sort of thing. And you may sit there and go, how do you get your arms wrapped around all of that? And what it really comes down to is in our particular setting of aligning, folks with, deep subject matter expertise and getting that expertise as quickly, to the forefront with respect to the customer in the claim adjudication process, and trying to bring that, together as quickly and efficiently as possible. And so, we have a very, very, laser focus on the customer, the customer experience and the customer journey, in this, very, heterogeneous, mix of, products and claims, as I was sharing with you. Now that we're, I'd say, it's old hat in terms of everyone working remotely. If you, looked back at, back in March, April last year, when we were having some of these initial conversations about everyone working remotely. How is that even possible? And I think, many in the industry, quickly realized, yes, it is possible. Not only is it possible, but you can really then, amplify, the talent of the, the claims department, both operationally and within, the claims business divisions, and find, additional efficiencies, over the course of the next, several months. And there have been, plenty of different tools that help, drive that. We've definitely seen a prevalence of, automated process workflow tools out there, that are low or no code to help, drive some of those particular, efficiencies in our space. On top of that, I'm sure many, have work streams in place, looking at the future of work. As we were preparing for this session, I think it was Mark who was commenting, isn't the future of work right now? Because we're already, living it in many respects. And yes, while we are in a more remote environment and we've been able to, deploy, proper resources and assets to all of the individuals who need it, again, to get to our customers, more quickly and efficiently. And yes, we're using, tools, like Zoom and WebEx and other, video conferencing capabilities to really, bring us closer to our customers, and other collaboration tools, like Slack or MS Teams or what have you, to help drive, some of those projects and initiatives forward. At the end of the day, it still really comes down to the people. And how does the insurance industry and our customers wish to engage with the claims department? So, many organizations are, identifying, major components of that, whether it's, focusing on the people, the technology, the workspace, the ever-changing legal or regulatory environment to help try to bring all of that together. And, until the vaccine is pushed out with some, volume, and the experts out there are anticipating it'll still be several months. We're still in this limbo period. So how do we take advantage of those opportunities? And as folks gradually come back into an office setting, presumably more in that kind of hybrid type approach, how do we ensure that the customers are still very much at the forefront of those discussions? And so there's that particular component. And then, on top of that, also, with respect to any, claim organization in any line of business, they're always keenly focused on, identifying and building out, staffing models and target operating models. And I think the target operating model piece right now is the bit of a challenge, right? Because you've got this ability to utilize some of these technologies that Mark and Cal, I'm sure, are going to go much more deeply into, while at the same time addressing what that human component looks like and what are the skills that are going to be needed as we start coming back into more of an office setting. And again, I use that term loosely because I do anticipate that it will be keenly focused on a more hybrid approach. Because I think a lot of folks are recognizing that by working remotely, by not necessarily being tied to particular offices or even geographic locations, that the talent pool or the potential talent pool for various roles, especially within claims, can be ascertained or pulled from various different places, and not just across different industries, but different geographies, time zones, and that sort of thing. And at the end of the day, we want to have a very diverse and inclusive talent pool and slate of candidates to draw from in order to then bring that best talent to our respective companies to ultimately serve the customer. So that was some of my initial thoughts as I was looking at some of the bullet points about being in the new normal through the lens of a specialty lines carrier.
Yeah, David. I'm very curious what was on your list from last year, I have to say, and I wonder if was it more kind of tech focused or specific pieces of technology or capability?
It was, I would describe it as, it was more tech focused, but then, kind of the construct of some of the insure tech verticals, and how, maybe historically there was more, perceived, disruption of the entire, insurance industry.
Yeah.
But then how it was evolving, or more into more partnerships, with traditional or legacy, insurance carriers. And so it was looking at that, and looking at, other, opportunities, there, and how that could help, facilitate, analysis with respect to, social inflation, for example. And again, these are concepts that are not going away,
Right.
but there's a different dynamic that's taking place. One of the bullet points that was drawn up was perceived blind spots for AI, and in looking at the various use cases in claims, whether it's building out a claim severity model for triaging new losses, or losses during the life cycle of a claim, trying to provide those valuations. We have to take a step back and recognize that those models are based on historical valuations and data, right? Yeah. And we're training our models to that data set. Again, not to say that there isn't value on a go-forward basis, but given on litigated claims, for example, all the court closures that have taken place, given some of the changes in from a legal perspective in the workers' comp space with respect to rebuttable presumptions in states like California and New Jersey, are these types of things shifting or changing the valuation of claims, where that might be, I might say, a blind spot for some of these models that were built based on valuations, based on a legal regulatory environment that didn't exist before, at least not how it exists today.
Yeah.
Right. And I think that raises some interesting questions.
Yeah. No, it is really interesting. And to your point, like, those things are all still relevant, still worth thinking about, but the priorities and the dynamics shifted. And it's not a surprise to me that the points you talked about now are more about the people and the expertise, both the internal people and the customer side, and the brokers and our partners.
Correct.
Yeah, really.
Correct.
I think that's a good list for 2021. Thank you for that. Mark Carter joins us as Manager of Business Innovation for IBM's global insurance industry. Mark, I'm wondering your perspective, especially looking across the industry and across carriers. I'm really curious about what you're seeing, and sort of how we think about the coming year and beyond, obviously, as we lay groundwork.
Thank you, Brian, and thank you, David, and thank you, Cal and Reuters as well. My point of view, and what I'm seeing is, there are multiple trends emerging as insurers adopt automation, and none more important than, leading insurers are transforming their claims process with automation, and with the purpose right now, especially to David's point, reducing costs, achieving a better total claims outcome, getting a better customer experience, increasing their use of data and data quality, while becoming more agile. I'm experiencing that leading insurers are using this time to transform the claims process with automation, with lower cost workflows. And what I'm going to major on for a few minutes is claims data integration. And claims data integration is really a driving force behind customer retention that can improve NPS through moment of impact analytics on claims operations performance. In that moment of truth, accidents, weather events, fire. Claims data integration can be used in improved customer acquisition. We're seeing behavior-based segmentation to highlight target risk, individual markets for acquisition, and claims data can increase acquisition of profitable customers by 6 to 8%. Also during this time, claims data can be used in claim settlement with cognitive models using advanced image and natural language processing to improve efficiency and in property and auto claims handling up to 5 to 10%. And an area that we're spending a lot of time on is in underwriting and pricing. Claims data integration can complement existing pricing models through the use of deep learning data science models, and predicting performance of underwriting for specific market segments or classes of customers. And in some cases right now, new usage-based pricing. So the whole claims data outcome can be impacted from the first experience to settlement. And the dynamic data really changes everything. Leading insurers are transforming the claims process with automation and lower cost workflows that are really driven by data. And David mentioned the target operating model. Leading insurers are using exponential technologies to transform the claims management cycle from end to end using what we call intelligent workflows. And we're seeing up to a 25% reduction in claims handling effort and a 20% reduction, up to a 20% reduction in leakage. We talked in preparation for our time today is the future of work, and that's going to result in a technology revolution that's already underway. Digitalization is reshaping the claims workforce, and as claims handlers are teaming up with computers and new roles are conducting higher value work, new roles like claims data scientists and a claims prevention officer are emerging. There are titles that are emerging that haven't been invented yet. And many insurers in Asia Pacific are using automation for process discovery to quickly mobilize automation claims target teams to find out where the process bottlenecks are and where the talent mismatches are to ID quick win areas while eliminating the time it used to take to do this. It's kind of like in hockey. It's forecasting where the puck's going to end up before the play even begins. All of this applies to personal, commercial, group benefits, specialty, captive subrogation, and life claims. And these new capabilities are really fueled by data and different kinds of data, historical data, predictive data, and most recently, in the last year or so, data that's actually in motion, live data. And I'm seeing improved efficiency, excuse me, by creating this more personalized customer experience to address declining premiums and drive lower cost models, especially in our topic here, claims. Insurers are self-funding these initiatives, and I'm seeing that while insurers are releasing IT debt to dedicate to automation projects, we're seeing cases where IT spending is increasing in claims automation only to take cost out. And through it all, the bellwether drive is improved NPS scores. And do all of these things well with customers, partners, and ecosystems, then the increased insurance digitalization that we're all seeing is going to really define your brand and reinvent the claims experience with seamless coordination of technology and the partnership of human and computer interaction. The more complex claims using digital data decisioning, can pave the way for stable growth and business agility. Best-in-class insurers are also building cognitive enterprises and a cognitive enterprise culture. And that culture is really through agile innovation. And this is made possible by integrating what we call exponential technologies. And those are 5G, IoT, blockchain, and the like. There's a lot of them. And using next generation applications like zero code and putting it on hybrid cloud and creating intelligent workflows that radically change how work gets done and expands that human and machine partnership. David talked about skills and talent, and that partnership is going to continue to enhance that worker and customer experience. Now, finally, kind of in closing here, I've got an opinion of where I see insurers facing significant challenges in successfully delivering automation. And the big aha is, while the volume and variety and velocity and veracity of data is a really hot topic among insurance executives, only 55% of business leaders think that AI and cognitive computing can bring benefits from optimization of claims, business process, and workflows. So what are the couple things to watch out for? First thing we look for is a task-based automation focus. Most automation projects are focused at the individual task, not a meaningful end-to-end process. For example, a claims task like an auto policy validation that's been automated using RPA really delivers significant business results to one FTE pool versus the entire first notice of loss process. Failure to address how legacy skills can evolve leaves money on the table and vulnerability. Firms have not been able and well-equipped to orchestrate, important word, fundamental change, and have a limited ability to identify where to automate and where to start. The second point is a narrow automation strategy. We see a lack of enterprise-wide automation strategy that limits the impact of automation. Claims automation, for example, doesn't natively integrate with core systems or underwriting and pricing. So as leaders need to continue engaging their wider organizations and take advantage of major events like a catastrophe to automate, a new acquisition to automate, a divestiture to automate. For example, early in COVID-19, it forced one of my clients in Asia Pacific to abandon their first notice of loss centers in Malaysia and the Philippines. They didn't have a choice. Hence, they had to rescale their talent while discovering that enhancing those skill sets using automation to eventually have machines work with humans and handle those claims. And they ended up going onshore headquarters using that workforce at a lower cost and higher efficiency. So Brian, the future of claims workflow is really now intelligent and reorchestrated. And the intelligent workflow for claims really delivers a better experience for both policyholders and claims adjusters. And I'm going to give you an example. So a personal use case example, a personal auto use case example. A flustered insurance claimant just involved in a car accident will be able to provide her insurance company with all the information needed in less than 30 minutes. An anxious insured claimant will be able to know what's been done with and what's next for her claim without having to request or wait for information. A typically powerless insured claimant will be able to define her claims experience being an active participant, a personalized participant, rather than just merely a spectator. And an overwhelmed claims handler will be able to spend all of their time resolving complex exception claims and interfacing with the insured or the claimant or the firm without spending time on claims that should be rated enough for automated processing. And an overwhelmed claims manager will be able to resolve all assigned exception claims without spending time on analysis and reviewing historical work or historical claims to date. A claims manager will utilize digital data decisioning and conduct higher value work. So the future impact of intelligent workflow and claims is higher productivity. I think I got the point across: proactive use of data, new business models that will emerge, agile innovation, right? Use all the technology, extreme personalization. And we're really right now, David said there's a blind spot for AI. We're at the starting point. Insurers are at the starting point to build a platform to add AI to legacy applications, and most importantly, reduce cost of operations with a better claims experience. So Brian, that's my point of view. And David, thank you for teeing this up so well.
That's great, Mark. When you use those adjectives to describe the insured, and then on the carrier side, the adjuster, the manager, I think we all live that firsthand and feeling that, and that's what we're trying to avoid. So great to bring some examples of reducing the angst, the anxiety, the overwhelm, the frustration on both sides of that equation. And early on, you made this point about NPS. So when we do that, we lead to a better customer experience, which leads to better retention. And that actually, there's nothing wrong with reducing LAE. There's nothing wrong with managing indemnity. I'm all for that. Or FTE costs and in the processing. But the real prize is when claims is then a driver of acquisition. That blew my mind. You shared that stat that actually the claims data can lead to better acquisition, but the retention. Build that booking.
Well, and Brian, I've spent the last 15 years working with C-level executives in claims and operations and policy and the whole C-suite. And when you nail this stuff down, there's only a couple of really important numbers across different lines, across different geographies. But the story begins to sound the same. Data, people, technology, and looking at a strategy that is not just 3 months out, but it's not 20 years out either.
Right.
There are some interim opportunities, and it's really an exciting time right now.
Yeah. Well, I totally, when we think about that word sustainable change, those words, it's not the 3 months because those are all the fire drills, and it's not the 20 years because that's theory. Interesting, but theory. So what's the path that gets us to the 20 years? Thank you for that, Mark. Really, really great stuff. And while you were talking, we got some questions coming in. David's conversation, David's points brought some questions in too, which is a friendly reminder to put your questions in. We have a few brewing that I want to dig into. But before we do that, I want to hear from Cal Hankins, who's Senior Vice President of Claims at CSAA Insurance Group, which is a AAA insurer. So Cal, over to you.
Thanks, Brian. And thanks, Mark and David. Appreciate it. And I think you guys, hopefully everybody will find what I'm going to talk about today in regards to driving sustainable change. We'll kind of just go right in line with what Mark and David talked about. So again, Cal Hankins, I'm Senior Vice President with CSA Insurance, and I've had my position here for just about 3 years now. I've been with CSA for about 16 years, and I've been in the insurance industry, all in claims, for the past 26. And when I actually got my position, which obviously was prior to the pandemic, my team and I really set out to look at automation and really completely redesign our operating model. And just like everybody else wants to really gain efficiencies, increase customer service, maximize quality. But we also set out to ensure that the experience from the employer perspective was not lost and increase overall engagement. And we've gone through a series of changes really in the past 12 to 16 months, and which I want to kind of share with everybody today as far as some of my learnings and what we've been able to do. But at the end of 2020, we were able to accomplish with these changes an increase in NPS of 5 points. And in fact, we've been increasing month over month, and results in January continue to increase. Overall quality from a variance standpoint, if you think about from auto, I'm sure everybody in claims thousands of audits and files being audited. Overall variance has actually been at 3% and below. Our engagement as a result of all the changes, we've been able to increase it by 5 points. But most importantly, what I like is being able to balance everything, but there's also the expense component of it. We've been able to take out of our operating budget about $30 million per annum as a result of the changes. So really, what did we do, and what would I recommend to the organizations going forward? Just as we've been talking, through today, is technology and competition within claims is growing at an ever rapid pace. And you look back 10 years ago, and I tell people, with my job. If I had my job 10 years ago, I think it'd be a little slower pace than it is today, because you have things coming at you, technology and I think more attention is being paid with claims than it ever has been within the organizations. And the first thing that I would tell people to do, and one of the things that I've done, and I'm still continuing to learn on this aspect, is resisting novelty projects. I think it's critical that you determine what your end game is. Look at it from the customer standpoint, and what do you really want to achieve? And through that, one of the things that I've done and my team has done, and we continue to work on this, is really to fight old paradigms. And as far as how the industry has happened and what we've done, and best example I can give you, one of the examples that we've really done is looking at, if you think about span of control, right? Is everybody in the industry, and for the longest time, we've always looked at complexity of work, and this is a lower complexity of work, so I can have a higher soup to staff ratio and may have 12 to 1, or I may have the 6 to 1 with more complex. My recommendation, and what we've been doing in our organization, is look at the span of control by how much money a leader adjudicates, and not by how many staff they have. And what I would say, if you go by staff, you actually are rewarding bad behavior, or that's my experience. And it really creates leaders that they want to build their kingdoms through bodies versus what they're really responsible for. And if you take that out of the equation, and you get them not worried about necessarily their job and their span of control, and they focus on what they're responsible for as far as money, it's actually led to some really positive results. Second thing that we also did is we completely overhauled our goals. And I personally believe goals are more important than ever. We completely reset our goals to more of a shared based goals as an organization, all the way down to the individual level, versus having individual goals. And I personally believe even a small miss on a goal that allows one person to win at the loss of another colleague can have a really devastating to an organization. Example of this that I can give you that we did is around our customer service. targets, and we had more. We now have, we call it our NPS versus your NPS. And what we found is when individuals had personal individual goals, we actually found them at times avoiding work, avoiding taking care of the customers because it had impacts on their individual scores versus overall organization. And really by having a shared goal and accountability, along with other changes we've had, that's led to the highest service rating that we've had in 16 years. And a lot of it is the model that we've been able to build. And the NPS that we're doing is we built it and we set out to build a sustainable model that can score a high NPS versus trying to push for maximum effort, and the NPS goes up, and then as soon as you stop pushing, it goes back down. So we've watched our model even through some changes we've had. It's actually just sustained itself. So that was the foundation we kind of set, and during all that, we also obviously we set out to automate. And what we found was that there, Mark, you were kind of alluding to this during your discussion, is that there's no single leap, there's no single program. There's no single move that can achieve the level of decision-making automation. It can happen to be required to be best in class. And instead, what we found was we needed a suite of projects, we needed a suite of processes, we needed a suite of programs, and we needed to have a lot of conversations that are required to really achieve the underlying architecture. And as a result, and really after 2 years of a series of projects that we've been able to do, I could share with the group today. We've been able to we call it straight through processing. And I know there's different definitions of straight through processing, but we take the first notice of loss call, and after we finish that first call, 60% of our auto claims we never touch again. We actually are able to close those out, notify the insured, everybody, and claimants alike going through that process. And so in essence, we've been able to combine our first notice of loss, our customer service unit, or low complexity unit, probably in some areas, as well as our auto physical damage. We've been able to combine that all into one. And this is just one of the major projects that we were able to do that I alluded to with the $30 million in savings per annum, that we were able to really reduce labor expenses. And I will say, we were working on this prior to COVID. When the pandemic hit and claims frequency went down, we took advantage of it. And we were able to train a lot of our people and really go to this model extremely quickly. And at the same time, Mark, you talked about first notice of loss. We also, at that point in time, our service organization was taking our first notice of loss. They still assist us with it, but we were able to take back during core hours of operation. We were able to take back almost all of our first notice of loss because they actually saw an increase in calls on people reviewing policies, premium refunds, and everything like that. So we were able to take advantage of that, and we found that it was more efficient. We were able to do a lot of things, Mark, that you alluded to as well. So, but I'd also say, and we've also talked about this already in the conversation today, that as you automate, I think the key and where people really fail at is you have to attach adjudication or examination to the process. And if you don't do that in the back end, when you automate, you will fail at it. You need to make sure you have an examiners in the back end. And what we found so far through our automation is every 10 people we reduce in the front line, through automation, we actually are putting one in the back end at a higher level to make sure we're making sure those changes. And I know I'm not going too much into the model and everything else, but I've had a lot of people talk about our straight through processing and everything else. And they said, what does that do to your severity? In fact, with our examiners in the background and reviewing the process, we've actually have not seen our severity jump at all. In fact, it's actually been lower than what we've actually forecasted. So, and we're saying you're right within industry, if not continue to trend what we see below industry. The last point I would make today is we've kind of talked about it through the three conversations, is you really need to treasure your professionals. There will be an ever growing need for a number of high-end technical people to compete within this new world that we're doing. And the thing I always talk to my group about, and is, if you think about the military, and I think over the years, we've always tried to, we think of it as infantry, and infantry, you can actually train, you may be able to train in a short time period, a week or a month, what we need is more special forces, right? We need more people that understand, have more skill sets, can actually work broader knowledge, because as you automate, it's leaving the complex, it's leaving more and more complex tasks. And the more people that you have that are special forces, the more I personally believe that you'll be able to. So to end, and just to recap, I would say, when you can, and I know everybody in the claims world, it's a lot of pressure, but resist novelty projects, stay your course. I would say look at your goals and share and change them to more shared goals when and where possible. You do need individual goals, but just think about the consequences if you have individuals and how they get to those. And automation requires a suite of projects, processes, programs, and a lot of conversations. And make sure you create the correct underlying architecture. When you automate, make sure you attach adjudication process in the back end, and then again, treasure your professionals, because you're going to need the people with higher skill sets as you go forward. So, Brian, I'll turn it back over to you.
That was great. And, there are some themes that play across, and Cal, to end on that people note, goes right back to the key theme that David was talking about, and a lot of what Mark was talking about is bringing out, allowing people to be special forces rather than having them bogged down in the minutia of the process itself, which, takes away from NPS, takes away from employee engagement. You talked about both of those going up. I think that's no coincidence that you see generally the two will go up in lockstep. Treat your people right, treat your customers right. The rising tides float all boats. If I said that phrase right. I love resist novelty projects. That goes by other names that people may recognize, like shiny object syndrome and tech for tech's sake. That is really easy, an easy trap to get into. And David, what I thought perhaps some of those early 2020 project list ideas were, because there were lots of buzzwords and things floating around that we, should be looking at doing. Maybe it's a good time to rethink whether that's the right places to be investing and what's the purpose of those projects, because there's plenty of interesting things out there. I want to jump into the Q&A because it's been flooding in. So please do put the questions in the Q&A section. I saw a couple come through in the chat, so just please enter them in Q&A so we can manage them there. This is something I think will definitely play across the board. Actually, two separate questions that I want to combine because I think we're hitting at the same theme. One is specific to the FNOL process. And the question here is automation or higher levels of automation in FNOL, does that drive up the opportunity for fraudulent claims to be processed? Tied to that, I think we're on the same mindset here, is can claims automation minimize claim leakage? Or, tying it to the first question is, does more automation lead to potentially higher leakage? So two negative aspects in claims that we try to manage. And the presumption is the more automation, the more we're taking out that human judgment, that human expertise at those key moments to spot, oh, this one is questionable. We're paying more than we should. Maybe in that rush to, Cal, you mentioned the 60% sort of straight through touchless post FNOL. Are we paying things that we wouldn't have paid in a different situation? And so effectively we've increased leakage. I'd love to get into this. David, it's been a while since you got to talk, so I'm going to start with you. And then Cal, I'll jump in. Mark will close up with you on this one.
Yeah. It's a great set of questions, focused on that FNOL process, and the emphasis of creating some, automated, workflows in that particular space. And what does that mean, from like a potential, fraud indicator, and also, potential leakage. And I'll take those two separately because I do view those as two, separate pieces. On the fraud side, I'm sure most of the folks who are on the line in attending the webinar are keenly aware there's an entire industry focused on fraud detection, using AI and machine learning to train tool sets with claim data. And I would envision that yes, if you've built your automated process workflow and haven't thought about an inflection point with respect to injecting that particular technology up front, there may be some additional activity that you're seeing there. But I think the industry has examined that, if you couple it with fraud detection tools, that may help minimize or mitigate some of those effects. On the leakage side, I view that as quite interesting, because I actually view the potential automation as helping to reduce leakage, not necessarily increase it. And here's why. Most organizations, claim departments, have very specifically built teams. Again, we go back to the people, we go back to the professionals. Whether it's a complex or large loss unit team that's specifically designed to handle those most severe claims coming in the door, and then many a times you'll have your higher frequency, lower severity teams that are high volume teams. Again, we don't want to call it straight through processing, but there are less touches potentially associated with that. And if you've built tool sets to help automate and triage new losses as they're coming in the door, so that they're properly routed, or at least flagged with the potential to be more properly routed, you're bringing the proper claims to the right teams more quickly and efficiently. And a lot of times leakage in the industry and in claim departments is because there's a misalignment in the expertise or the teams that are handling that particular claim, not necessarily recognizing that particular valuation. So throwing out an example on a litigated claim, for example, if you have a high volume low severity team taking on a litigated claim, and they view it, they're thinking, okay, this isn't going to be very problematic. But if it had gone to a complex team and they would have recognized that the plaintiff's law firm is one of the top 3 law firms in a particular state for getting multi-million-dollar verdicts on a regular basis for that type of claim, then you can see how there's some potential misalignment there as you're going through the claim adjudication process. Assigning counsel who may not be as familiar with that firm and that sort of thing. And that's, I would say, where you generally see it. So I actually see automation in some of the claim severity modeling helping route things more properly, which actually in fact reduces overall leakage, whether it's on the loss side or your allocated loss adjustment expense side as well.
Thank you. I totally agree. I think getting that expertise to the matter faster is a great way to do it. And there's solutions that can watch for that as well, just like on the fraud side. So to help you sort of monitor the potential for leakage. Cal, does that align with your view on both the fraud side and the leakage side, or are there things that play out differently in your world in auto and home?
No, I think David said it perfectly. And I would just say, for those that, from an automation standpoint, and one of the things we looked at, I go back 5 years ago, we had a model where there was a theory that we needed to touch every auto physical damage estimate, and the more we looked at it, the better we would be from a quality standpoint. And if you really truly look at what you're doing, and you're probably seeing that you're probably rubber stamping 70% of those, if not more. You're just paying them, but you are looking at them. But what we found, and David, you alluded to, is that we've actually been able to take those and set we're just not paying to pay claims. We actually have a series of process. We have background that basically the best I can say is we have, green, yellow, red, right? And we can turn that knob, and we can pay them all if we want to pay them. But the green ones, we would have paid anyways, even if we looked at them. So we're letting those go through, and then it's taking those resources and allowing us to put on the more complex, which is actually allowing us to reduce the overall claims leakage. So we've actually seen our quality increase as a result as we automate. So it actually hasn't gone the other way, which is what David alluded to. And then, again, in what on the first notice of loss aspect, if you think you're just going to automate something, and again, not put the adjudication in the background, and not put a series of and really using technology to your benefit, if you're not doing that and putting the right the right technology in the background to make sure that you're doing the right thing, you'll see more fraudulent claims come through. there's obviously, we all know that people are trying to obviously hack something or do something or cheat, try to get money from us, whether it's people or vendors or whatever it might be, right? That's within the claims process. We need to make sure that we stay one step ahead of them and watching all of our files. So I think David hit it perfectly. So
yeah, no, thank you for that different perspective. So we've got specialty lines and the kind of core P&C lines of auto and home, same viewpoint on it. So it's not particular to one piece of it. Mark, as you look across carriers, but also some of the solutions that are automating and maybe protecting against fraud and leakage, what's your view?
There's really two dimensions to this, and both David and Cal have nailed this. I'm going to add a third dimension to this, and that is really how the organization is aligned using data. I'm going to come back to this thought of data. So when we looked at the challenges to overcome in reimagining a claims process, we looked at the 80 or 90 task pools from notification to assignment to creating the file. And when we went into it, okay, well, let's talk about fraud. Fraud is sometimes checked a couple of times, right? So we combine the processes and into claims and intake reporting. And we check fraud early, we check it often, we check it at the first notice of loss, and the moment, in a couple of cases, the moment the claimant calls in, the fraud detection begins. And it not only begins with the claimant, we're using external data, so behavioral data. In some municipalities and countries, credit data, weather data, right? You said you got in an accident and it was 5 o'clock in the afternoon and pouring rain, but the data is telling us that it's 2 o'clock in the afternoon. It's beautifully, it's sunny, and the sun was at your back, right? So that's an example of mitigating fraud, and the more data we can infuse into the decision making, the automated decision making, the easier it is for the adjuster and the first notice of loss team to work through that. And so someone asked a question around, I'm going to go forward a little bit about data in motion, right? So data that's taking place right now, that leads to infusing these exponential technologies and that I spoke about. So in terms of fraud and leakage, we do it earlier, often, and the next part I think is important as we look at how our systems are connected. Our experience and what I've seen is, on the average, many insurers have 3 to 4 policy administration systems. So that's not consistent across all lines of business. But think about that transaction going through not only the applications, but also the infrastructure and the number of different cloud environments. So from a technology infrastructure perspective, and adopting the ability to use these rules and data up front to mitigate and prevent fraud, really sets the stage not only for what my colleagues have talked about, that efficient and fair settlement, but a faster settlement. And when fraud rings begin to reduce, that will directly align to growth in business volume. So we can go on about this topic because as we look at how data is being used, how the data sciences are being used, we can easily create cases based upon historical data, as well as what we're seeing and how those blind spots are in front of us.
Yeah, I think that's really well said. And you did me a favor by calling out one of the other questions. So because we have a lot of them, so we get to nail another one. So thank you for that. I'm going to attempt to combine 3 questions right now. Let's see how this goes. So we have Stephen Applebaum, Tim Christ, and Sean Allen, who asked 3 great questions that I'm going to try to combine. Stephen and Sean were asking specifically about, are there pockets of business, whether it's books of business or profiles of a given carrier or lines of business, that are more or less likely to be automated? So are there pockets of your worlds that tend to lead to, being able to automate more? And we have presumptions about this. Cal, I would expect your world to be more automatable, David, than your world. So, let's challenge that and see if there are indicators of what drives it. But Tim's question, if I can build on what Stephen and Sean put out, is what are areas of the claims process that have been ignored? So thinking about the nature of the business and the process itself, where are we seeing higher or lower levels of automation? And I'm combining them because we have 10 minutes left and I want to get as many of these questions answered as possible. Cal, can we start with you on this one?
You try. I'm thinking about it.
Right.
I mean, as you were asking the question, obviously automation that I think everybody's tackling right now that we also tackled is more of the low complexity, and it's things that it's less decision making. It's things that you can automate, and again, it's like the 60% we're able to do right now is single car accidents. Not multiple party. It doesn't really involve much of an investigation, so you can actually start to automate that. Things that parts of the business that have been ignored. It's a great question, and I have to think about that. And the next level we're going to get into is we're starting to get in, and I think probably, I guess off the top of my head, I would say more of the home side. I think auto is actually, in my opinion, auto is a lot more advanced. There's more vendors I think that we were able to work with to automate and look at on the home side of it. We're trying to see if we can replicate what we've done on the auto side, and can we take low complexity on the home side of it as well, and can we start to take the first notice of loss and try to settle those at the beginning and automate completely. So I'm going to think about it for a second, Brian, and maybe you can go to David and Mark, and I'll maybe jump back in.
Cal, if I could just jump in and give a couple quick answers on this one. It's not necessarily being ignored versus prioritization. So I would say in personal commercial, it's medical information. It's not being ignored. However, it's being reviewed based upon permissibility. In commercial and specialty, it's worker safety, and it's all around medical and health. It's not being ignored, but in order to initiate in order to maintain consistent fraud mitigation, that's one area that I would say we can spend more time on based upon how our world is changing. Some countries are diving into that much faster. And the last point on that, and I'll give it to David to discuss, is as firms are getting more serious about worker safety, and as P&C firms are getting more serious about using medical information to make decisions, we come back to that digital data decisioning, which the decision's no longer a decision. It's the data saying, here's your range, go forward. Okay. David, back maybe over to you.
Yeah, no, thanks, Mark. And Brian, thanks for sending this one over to Cal first. So I at least had a few moments to collect some thoughts, because to your point, Cal, this is a great, set of questions, but obviously, requires kind of, some thought to be given to the pockets. And Cal, I do think you hit the nail on the head where, I would say, historically, or maybe up until this point, more the emphasis has, certainly been on your first party lines, your personal lines, your auto, your homeowners, and kind of those higher frequency, low severity, teams where you're seeing more of those efforts being guided. And Mark, to your point, on the more complex items, and I'm kind of talking about like the claim adjudication process, not so much, the front end with intake and FNOL, or even the back end and payments, because I think there's definitely been some good automation in some of those core blocks. But in that claim adjudication space, on the complex side in particular, there are challenges there. Mark, you raised in some of the spaces with respect to medical data, being concerned with privacy, under HIPAA and high tech, and there's also this broader overlay that we've seen with respect to the attempt to develop any of these particular tools, guidance from like the General Data Protection Regulation coming out of the EU, California's Consumer Privacy Act, or Privacy Act, as well as New York's Department of Financial Services Cybersecurity Reg. There's this overlay of utilization of that data, making sure that we are being compliant with personally identifiable information or protected health information as we're building out these particular sets. And so it's not that we're ignoring it. It's just there are maybe some additional hurdles that need to be thought through and thoughtfully addressed as we're going through that process. I think back in that particular space, a few years ago, I had a conversation with some other carriers who were attempting to build out some claim severity models for medical malpractice claims in particular. And at the time, others in the industry were looking and saying, okay, well, for the casualty lines of business, you could build a model which scores a broken pinky is lower in a scoring than a broken femur, sort of thing. But in the med mal space, it was a little bit trickier because an individual may present to the doctor's office with an injured pinky or toe, but then due to some alleged professional error, that they end up having much more severe injuries or perhaps even pass away, right? So there's this different dynamic in terms of utilizing some of those technologies like OCR and using the models to score those things where it's not as clean or as clear cut in these more complex settings. And again, that's not for want of trying. I think that there certainly is going to be continued effort in trying to move into that particular space. We've seen it on different outfits out there, looking at litigated cases, trying to build predictive models as to the likelihood of success of a particular brief in a particular court before a particular judge. Ecstatic that folks are looking at that, trying to see if there's some guidance that could be provided in there using the data that's available. So I think there's more to come. I think there's a bright future for it. But those I think are some of the hurdles we're seeing currently.
Yeah. No, I think overall really good conversation on this. And I mean, David, the point you just raised, with like this plaintiff's attorney, this judge, et cetera, is really helpful, but so many of the claims don't go into court. So
Right.
Then we've got the whole mediated space, which is the majority. So it's not that it's ignored, but it's, what's the analog for the space where you don't have that kind of clarity? Cal, I think I just stepped on you as you were about to jump in.
No, that's fine. I was actually just going to say, I think to both Mark and David's point, I think one is prioritization. I think I agree with that. And then we've been talking for years now about data, right? And I think and I shared with this group on another phone call, but one of the things that we've been able to do is, I go back 5 years ago and I had three claim systems, 7 policy administration systems, and we're down to 1 each. So allowing us to get a hold of that data. And then it's a matter of, once you get a hold of the data, what is it telling you? And then, it's not me. I've got some brilliant minds that are able to look at that. And I think that's where the future is going, and that anytime you can predict something, and if you can't predict it, can you automate it? And even if you can predict it and automate it, the question is the technology is there. So, and I think that evolution is coming extremely fast, and there's a lot of things, but I think there's an order that you have to go in, and you can't just automate it, but you actually say, is it right to automate it? And then going through that. So I think it turns into a prioritization and things. That's what we continue to look at, is what we can. And then as more time evolves, we're going to get into more and more complex issues, I think.
Yeah. Mark, I saw you come off mute, so I'm wondering if you wanted to add something. If not, I want to close with a thought you raised, actually, but do go.
Well, I just wanted to, I came off the mute to, first of all, thank you, Brian and Cal and David and Reuters for doing this, and apologize to all of the questions that have not been answered, because I've been looking at the chat and the Q&A, and there's some great questions. And Brian, I would invite you and Cal and David to look. We should huddle up and provide answers to all of our clients and partners and colleagues that have joined us today. So over to you, Brian. Thank you.
No, thank you for that. We did try to get to as many as we could, and we piggybacked a few on there. Cal snuck in another answer without realizing it, so I gave that one credit, but we still have 19 questions plus questions that were flowing in the chat. So Mark's 100% right. I want to leave on, Mark, something you said in your opening bit that stuck with me. And I think this theme has been very consistent as this conversation's gone on, especially with the bit we're just talking about. You used two words that stuck out to me. One is intelligent workflows. Okay, so you actually used three, but that's two of them. Thinking about the flow and how things can move. And it's not a linear, like automate this and it's done. But how can that life cycle, the claim, adjust and flow and respond? So I love that. And I think that's one of the things that we're getting at here is making those intelligent decisions about things instead of looking so binarily about a flat decision tree. The other is orchestrate. And you flagged that word when you said it. And I think that's one of the key things that's come in here is not thinking in a point specific manner. Cal, it gets to your point about the novelty projects, which tend to be a bit point specific, but orchestrating across the piece and looking for those bigger answers. David, it goes right back to the list you threw out versus the list you built, right? So Mark, whether you realize it or not, pretty prescient there, a couple of notions that have held throughout this conversation. Really great. And yeah, we didn't, now there's 20 questions. There's more coming in, even though we haven't, we're just wrapping up. But thank you to David, to Cal, to Mark for the time today, to all the attendees, to those who popped questions in. It was very lively. And thank you to Reuters Events for setting this up. Do watch your inbox for that March 3rd event as well. But with that, I will say thank you all and have a great day.
Amen. Thank you, everyone.